Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where we'll try to look for decent trading occasions on the market, and I will tell you what happened overnight, because we had FOMC Minutes, right? So this is like the most important event this week. But first, before that, let me show you the calendar, because today we had IFO from Germany, which came worse than expectations. Another worse than expectations data from Eurozone, and Euro-dollar is going lower, but obviously it's an influence from the American dollar. But still, data from Europe is not helping here. GDP, wait a little bit here. GDP from UK, wait for the calendar to refresh. What I wanted to show you, wait a little bit. Yes, we will have GDP in 28 minutes. So we are still waiting for this data. It's not out yet. Retail sales from Canada, so important data for the Canadian dollar. And we do have a nice signal on American dollar to Canadian dollar, so we'll see if this data will change this signal or no. That will be interesting situation there. As we said, it's all about the Fed, about the FOMC minutes. So, before the minutes, we had a spike on American dollar, and everybody was waiting. Here, American dollar, that's dollar index. We were on local highs, and we had a very high expectations about the numbers of interest rate rises in 2018. It was around 3 hikes. We got the FOMC minutes. Here you can see the plunge here. So apparently those minutes were not as hawkish as expected. That was the first consensus from this. Dollar went lower. Interestingly, gold went higher, first reaction. Dollar went lower, first reaction. 10 years yields went lower, and stocks went higher. So the first situation was like this statement is not as hawkish as expected. But later it changed, and gold went lower, dollar went higher. It all reversed. So I will give you some quotes from the statement. If you didn't read the statement, or you don't know what you should expect, because we have some guidelines for the future, so it would be nice to know what's written in those statements, right? So Fed majority has said that stronger growth lifts likelihood of further hikes. And some of the Fed officials saw appreciable risk inflation to lag target. What else can I quote you? One participant reported that financial market contacts did not see the relatively flat slope of the yield curve yield curve is a big concern right now in the market, as signaling an increased risk of recession. A few others judge that it would be important to continue to monitor the effects of policy firming on the slope of the yield curve, noting that strong association between past yield curve inversions and recessions. What else? A majority of participants noted that a stronger outlook for economic growth raised the likelihood that further gradual policy firming would be appropriate. That's a pretty hawkish statement. FOMC voters agreed to add word further in front of the gradual increases. Right? It's mainly because of the stronger economic outlook. That's a hawkish statement. And on the other side, we had a few dovish comments. Here's one. Some participants saw an appreciable risk that inflation would continue to fall short of the committee objective and judged that FOMC could afford to be patient. That's a dovish statement. Participants anticipated that inflation would continue to gradually rise as resource utilization tightened further as wage pressures became more apparent. And here we have another counterattack from the doves. A few participants posted that the recently enacted corporate tax cuts might lead firms to cut prices in order to remain competitive or to gain market share, which could result in a transitory drag on inflation. That's a dovish statement. Almost all participants continued to anticipate that inflation would move up to the committee's 2% objective over the medium term as economic growth remained above trend and the labor market stayed strong. Okay. So, the minutes were perceived less dovish about inflation, hawkish on growth, but pushed the dollar lower at the very beginning. And Citibank explained this way, this first reaction. Okay, because later, as you can see, dollar went higher. But what Citibank? Participants generally view the economic effects of the decline in the dollar and the rise in equity prices as more than offsetting the effects of the increase in nominal treasury yields. Majority of participants noted that a stronger outlook for economic growth raised the likelihood that further gradual policy firming would be appropriate. Members agreed that the strengthening in the near-term economic outlook increased the likelihood that the gradual upward trajectory of the federal funds rate would be appropriate. Okay, so I would say that this is a situation where after important data we have upswing, downswing, upswing, downswing, and both sides of the market are out. So first, buyers were taken out of the market with stop loss, then sellers, and eventually buyers of dollar won. That movement on dollar created us few interesting trading occasions. So now we will be able to focus on the trading. First, let's start with American dollar to Japanese yen. Here, this instrument maybe didn't move much, not as other instruments. I think we are still under the influence of this first scenario which we had, so an upswing and the continuation of a drop. What's the situation on American dollar to Japanese yen? Well, as long as we stay below the horizontal resistance here and a downtrend line, the sentiment is negative. That's our outlook on American dollar to Japanese yen. Gold looks a bit different here. A stronger dollar created a very important breakout in the midterm, because the price broke the long-term midterm uptrend line, this green one, and a horizontal support here on $1,324. That opens us a way to the support here, so $15 more. What I miss here is a strong movement after this breakout. This is not how the breakouts look like. But to be honest with you, as long as we stay below this, what's that color? I don't know what's that color. So, in my opinion, that's, I don't know, let's call it purple. As long as we are below the purple color, as long as we are below $1,324 per ounce, the sentiment is negative, with a potential target here on $1,307 per ounce. Comeback here will be a very strong buy signal because it will be breakout. But there is no buy signal yet. There is a not major, I think minor sell signal. This kind of a sell signal that I would not follow. But I need to respect the price breaking the uptrend line and horizontal support. I'm not saying this signal is minor because I'm bullish on gold. No. It's just because of the further reaction, because of the movements here. That's not how the breakouts look like. Breakouts supposed to be a bit stronger. S&P 500. So what we are having on S&P 500 is a correction. So the price is going down, but it's still in a safe territory. The volatility on stocks came back to the low levels. No attractions whatsoever. I don't have a trading signal on stocks, unfortunately. Even here, when the situation on FTSE is a little bit more clear, because we do have a nice horizontal resistance, we do have a nice horizontal support, but the thing is that we are exactly in the middle between 7,100 and 7,300. So as long as we are in the middle between those, there is a neutral sentiment. No buy signal, no sell signal whatsoever. Dollar index. I showed you dollar index, but now let's make an analysis of this instrument. Let's connect those highs, and we do have a neckline of the double bottom formation here. Once this resistance will be broken, we should expect a further upswing towards the downtrend line here. Red color. Now I know what's that color. For the buy signal, we need to see the price breaking this resistance. As long as we stay below, we do not have a buy signal still on dollar. Australian dollar to Canadian dollar. We almost touched the parity. Now price is defending the neckline of this inverse head and shoulder formation, but it's not only the neckline, it's also a horizontal support created by this resistance. And look on a daily chart. On a daily chart we have a hammer. If this hammer will stay here, major buy signal will be created. So hammer here, price closing above the green area, will trigger us an important buy signal on Australian dollar to Canadian dollar. Euro dollar also broke horizontal support and an uptrend line. The same as gold. Here, situation is very similar. Uptrend line, breakout. Actually, this is from 12. This is from 15th, almost the same period, right? So the correlation between gold and euro dollar is pretty high. The difference is they made the first high was higher, the second one was lower. Here the first one is lower, second one is higher, but the correlation between euro dollar and gold is very big. So we can see that all those movements, all those recent movements are mostly caused by the dollar. Not an escape from the safe havens or escape to safe havens or situation in Eurozone. It's all driven by dollar. And situation is similar, so we do have a breakout of the uptrend line and a horizontal support, but this breakout is not so significant. As you can see, there is a breakout, but now the price is climbing up higher. If we will be able to close the day above the green area, that will be a major buy signal created by the false breakout pattern. But again, as long as we stay below the green area, the sentiment is negative, with the potential target here on 120.70, which is pretty significant level if you look on a weekly chart, because what's that? That's a low from 2012 and it was respected here in September. In January as well. So it would be nice to test this level again. I wouldn't mind euro dollar falling to this area. Why not? American dollar to Canadian dollar. Here, ahead of the retail sales data from Canada, we do have an important and quite strong buy signal for the American dollar. Why is that? Because the price broke important resistance here. It was a support for quite a long time. In November, it was broken in December. After the breakout, it was tested as a resistance in February, and eventually it got broken yesterday. We broke the downtrend line, we broke the horizontal resistance only, and only problem here is that the price is still below 38.2. But I think that if we'll close the day above the green area, we should reach the 50% Fibonacci, and 38.2 won't stop us. But 4 hours to the data. If the data will be much better, it will look like 38.2 worked, because the price will go down. If the data will be worse, we should see an upswing here. And 38.2 will not be able to stop us here once the data will be worse than expectations. So 38.2 will not be so significant because we do have important data. Just remember that the first target after the worst data is here, 200 pips higher, which makes it an interesting trading opportunity. Next one is Bitcoin. Bitcoin is aiming 10,000. Again, we were here yesterday. We are here. We are aiming this support today. There is no buy, still no buy signal. We do have a correction equality pattern. Interestingly, the price is still defending the upper line of the channel up formation, but once we will break 10,000, the red area, and go below upper line of the channel down formation, that will be a false breakout and the positive sentiment, but there is no buy signal, but there is a positive sentiment towards the Bitcoin will be gone. Instead of a wedge, we have a flag. From the bullish factors, what do we have? Price being above 10,000 and above the uptrend line, the upper line of the channel down formation. From the bearish factors, what do we have? Correction equality pattern bounce from 11,000 and breakout of the lower line of the wedge formation. But for the trade signal, for the proper sell signal, what we need more is a breakout of the lower line of the channel down formation and a breakout of the horizontal support here. Once we will get that all, we will have a major sell signal for Bitcoin with the potential target not even on $8.7 thousand, but on $6,000 here. Euro to New Zealand dollar, not very interesting. Look at that, this is just a boring sideways trend. It looks even worse on H4. Look at that. The same open, the same close for the past 2 days. The price is just going sideways, sideways, boring, boring, boring. I would love to see some movements here, especially that apparently we broke the uptrend line here, right? But it is not a significant breakout, so maybe we'll see a reversal. Who knows? I thought that there will be much stronger downswing here. But as long as we stay below the gray area, sentiment can be still perceived as a negative one. Cable, British pound to the American dollar. We are still above the uptrend line and a horizontal support. An uptrend line and horizontal support together will be a good buy signal. Obviously, if the price will create a bounce there. If the price will not bounce from that level, that will be not so meaningful. New Zealand dollar to American dollar. So, apparently it works. What? This resistance. And the fact that price tested it here, 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 here. I said yesterday that, well, we can have another try. But price does not want to try again. If we will have another try, chances for breakout will rise. But if we won't have another try, well, we will have to look south. Where is the support here? Support is here, so we still have some space. Price can still bounce from the uptrend line and aim for the horizontal support. Luckily, if you're a strong seller here, you have a nice risk to reward ratio here. Because if you're a strong long-term seller, you will see this resistance 130 pips and the support 500, so we have nice risk to reward ratio. The thing is, I do not believe in such a strong downswing. But if you do believe, the place for stop loss is pretty clear. Because breakout of this blue area will be a strong buy signal. Euro to British pound, boring. So we do have a horizontal support, horizontal resistance, and we are still between that. Closer to the resistance, but it does not change anything. We are still in a sideways trend, which is the worst place to be. WTI is going a little bit lower. We had data recently after 3 weeks of build, API reports, a crude draw this week, and this is quite a notable draw, especially in distillates, minus 3.5 million. And this caused a small upswing. So, what's the situation now? Also, sideways trend, because we are below resistances here and above supports. Breakout of those two areas triggers as a buy signal. Breakout of the green area triggers as a sell signal. Simple as that. DAX. Above long-term support, below long-term resistance. Everything can happen. We can test the support again, we can test the resistance. I hate the situations like that we are exactly in the middle between important horizontal and resistances. This is not a good place to be. Australian dollar to New Zealand dollar. This is a good one. Technical movement. Especially it looks awesome on a daily chart. Oh no, I don't want to get rid of this. I want to get rid of this. And I want to show you left shoulder, head, right shoulder. Look now, gray area is a neckline, breakout of the neckline, test of the neckline, positive for sellers. Price goes down, creates midterm horizontal support, cannot break the breaks the support, cannot break it as a resistance, bounce from the resistance with a shooting star, confirmation of the shooting star because next candle is a strong sell. So that is kind of a movement that you would like to see after a head and shoulder like that. Potential target is here. 320 pips. Where should stop loss should be, like somewhere here. 130. Good, considerable risk to reward ratio. American dollar to Swiss franc. Here we are trying to create double bottom formation. Still a sell signal as long as we stay below this blue area, which is super important. Look at that, super important. Breakout of this blue area triggers a massive strong buy signal. But as long as we are below, that's a sell. American dollar to Singaporean dollar. Same but different, as they say in Asia. What we do have here is a downtrend line, channel down formation. As long as we stay below channel down formation and below the upper line of the channel down and below the horizontal resistance, there is a sell signal, but breakout here will be a strong buy signal. So this daily analytical report ends up with few setups still to come, that you will have to track the market, and we do have few signals which are currently on. So traders who want something right here right now should be satisfied as well, but patient traders always win. You have some guidelines here, hopefully they will work. Tomorrow, unfortunately, we do not have a daily analytical report because I'm traveling to India to give seminars over there. But we are back on Wednesday. On Wednesday, we are back. So especially those setups which are still to come will be good for you, because you will have something to trade during that break that we're gonna have. We're gonna see each other on Wednesday. Remember, money management, risk control is the most important thing. Not strategies, not signals. In the meantime, track us on our Twitter account and our website, downparty.news. Thanks very much and goodbye.